When you join the active duty military, the topic of life insurance is a logical thing to come up, except for usually when we join, we don't really need it. So they give us the service members group life insurance, SGLI. We all sign up for it, not knowing that you could literally go to the same company, Prudential, and get a cheaper policy directly through them instead of going through these government systems. The only benefit aspect of it is the fact that it's available and it's easy, but it's in no way a cost benefit to you. Now, this actually causes a much bigger problem later in your career when you're getting ready for military retirement, and all of a sudden, maybe it comes up, well, how do I replace the SGLI? How do I protect the military retirement pay? What is this survivor benefit plan? What is the VGLI? And ultimately, that's what this video is about. What do you need to know about VGLI and SBP, Veterans Group Life Insurance, and the Survivor Benefit Plan, so that you can make the decisions you need to make on whether or not you need to keep one of them, both of them, or have neither of them. So stick around and watch this video, and in a few short minutes, we'll make sure you get the answers you need. Welcome back. I'm Scott Tucker from US VetWealth, and you're probably watching this video because you've been checking out our new Navigating Your Military Retirement Pay and Benefits guide and online portal where you can get access to these videos and join our weekly live calls where you can come in and ask your questions around any of these pay, pension, insurance related topics for those who are retiring from a career in the military. So, today's topic is what do we do about the VGLI, Veterans Group Life Insurance, and the Survivor Benefit Plan, otherwise known as SBP. So let's dive into this graphic so I can explain it to you in a little more detail. So from a side-by-side comparison, yes, there are some similar types of benefits and costs because it's all based around death. These are survivorship programs. Life insurance, as it's typically understood, is actually, if we're being honest, it's called death insurance. I mean, it should be called death insurance because that's the only time that it gets paid out, that there's any sort of benefit. Usually, for the vast majority of the way people design these things or use them, is it's all about what happens just in case somebody dies. And given that the just in case, technically, even for active duty military, is still probably a really, really low probability, especially when you're getting out of the military. The only thing that makes it a higher probability is if all of a sudden you're extremely unhealthy, right? And then the survivor benefit plan seems also like an insurance, but it's not an insurance at all. It's actually more like an annuity because your pension is an annuity and the survivor benefit plan is just a function of the pension, right? So the main thing to know about VGLI and SBP from a benefit perspective is that the benefit is that you can get access and qualify for them no matter what, as long as you do it in a certain time frame and sign up for them, which we'll go over in a second. Then you can get access. That's the benefit. Having served, you can get access to insurance. Unfortunately, the way that it's presented is that it's part of your program. It's part of your system, and that's not true at all. It's there to make sure every veteran at least has something available, and especially every retiree gets a little bit extra. The SBP is only available, of course, to the retirees. Did you even know that SBP was already included in your active duty pay? It's just kind of automatic. So let's get into the difference between SBP and VGLI. The main thing about Veterans Group Life Insurance, or VGLI, is that it is designed because it just changes one letter from an S to a V. That's the whole thing, right? No, just kidding. Yes, it is there to replace the Service Members Group Life Insurance, which is a fixed cost for everybody. The same current $25 a month for you, no matter you're an 18-year-old private or a 55-year-old crusty colonel. You're paying the same price. That, to me, as someone in the insurance industry who knows that all these prices are supposed to be based on your age, your gender, and your health status, why on earth are we having active duty military, the young guys, paying the same price as the old crusty guys? Okay, that doesn't make much sense. And so the reason, so VGLI does something very similar. It's a group life insurance. That's what the G is for. Group means everybody pays the same price because it's essentially the same risk. It's diversifying the risk without requiring any sort of underwriting. So that again is the so-called benefit, the assumption that everybody's going to be sick and broke and not going to have any option. If you have VA disability, you're not going to be able to qualify for any private insurance. So thank goodness we have the VGLI. Well, that's just simply not true. In all cases, you have to have some serious medical issues typically that aren't common amongst active duty military retirees, even after a career. Even things like sleep apnea, mental conditions, TBI, heart issues aren't always a hard no or even a hard extra cost. Things like being a pilot used to be a problem, not so much anymore. So the assumption when we're going through our veterans VA disability briefing is I'm going to be broke and sick. So then they turn right there and they present you the VGLI. It's like, oh, look at all these problems you have. So therefore you need this. Well, might be the case, but probably not, because either way, even if you get the VGLI, the cost is still going to go up. It goes up immediately. Depending on your age when you start, you're going to be bumped up a price anyways, because even if you start VGLI at age 30 or age 50, that same $25 a month is going to go up to whatever the price for VGLI is at that age, right? And then every 5 years, it's going to keep going up. And so by the time you get into your 60s, it really becomes so expensive. I think $920 a month for, I think, when you're getting close to the late 60s, 70s, $920, $1,800 a month. In other videos, we'll go through the exact calculations. So this chart is extrapolated from the data you can get from the VA website or the VGLI calculator. But clearly you can see that the costs go up exponentially every 5 years. And so whenever you get out of the military, whatever age you are, if you get VGLI, that's the price that your SGLI jumps to. Remember, $25 a month is about $300 a year. So even if you're getting out at 40, it more than doubles. And then it just keeps going up. And so you can see that as we're later in life, the cumulative amount of money going into VGLI payments can easily hit the 6-figure mark should you stay in it for close to 30 years. Most people don't, of course, because they start to realize how expensive it is. Then later in life, when they probably need life insurance the most, that's when they end up having to cancel it because they can't qualify for anything else and it's too expensive to keep it going. How unfortunate that doing something that we thought was a benefit like SGLI so early, just make it easy. You're a soldier in the military. Something might happen. Well, don't worry. We've got it taken care of. And then right at that retirement mark, if you can't qualify for something else, or if you just opt into this, not realizing it and don't find out about it until later, well, again, the extra tax that you've been kind of lumped into and the extra costs associated with it, and then the disappointment later on when you end up with nothing, those are the type of situations where it tends to backfire. Unfortunately, it negatively affects those who can least afford it. So if you're watching this video, that's probably not your situation. There's a very low chance that you'd actually want to be getting VGLI, but it's important you at least know how it works because you can let other people know. And if you are one of the few who just was assuming it was part of the system, now you know different. And show you, and of course, if you're reading the white paper, you're seeing the exact numbers. But that's significant money because if you don't die, now you've been paying those increased prices. And oftentimes we get folks who have been paying into it. They're nearing age 60, nearing age 70, and they're still doing very well, very healthy. And they're wondering, is it still worth it for me to pay, $1,000 or more a month for what is a $400,000 death benefit? And that's it. So if you've already put in tens of thousands of dollars, some cases even over $100,000, how long do you keep paying for it? And oftentimes people can't even afford paying for it because it's just eating away at their retirement pension. So, these future risks are super important, especially when something is presented as a benefit. So one of the benefits that makes VGLI a little bit different than SBP is the fact that if there is a payment, when somebody does die, assuming they still have the policy in force, it's a lump sum payment. Now, that lump sum at a max is only $400,000, the same $400,000 as SGLI. They might bump it up like they did about 20 or so years ago, when it used to only be $100,000 for SGLI. It's like when they bump up a Roth, you used to be able to do $6,000 a year. Now you can do $6,500. Like, we bumped it up to match inflation or something. It's like, this is ridiculous. Those are super small amounts of money. And if you think about the big picture of military retirement, $400,000 honestly isn't going to go very far. And so for the costs involved, it's unfortunate when a veteran either perceives that that's their only option, or because they started solving this problem too late, then that's unfortunate that is the only option for them. Because, had they not been misled or misunderstood that SGLI wasn't a requirement and that it kind of covered everything up until retirement. So that becomes the problem with SGLI, is the fact that we're so used to having it. It's easy. It's just taken into place. And we don't realize that we're going to have this problem when we get out of the military. It's like, oh, I got to qualify for a replacement unless I just do the VGLI thing, and then the price goes up. You don't want to find out about that later in life, of course, when it might become too expensive to do something differently, because ultimately, either way, VGLI is just simply unaffordable long term. If you don't die, you're just not going to keep paying for it, especially in your 70s. So again, in another video in the white paper, you'll see exactly what those numbers are. But again, in this case, unlike SBP, it's the same price for everyone, exact same price, just depending on your age. Even different genders don't pay a different price, which really makes no sense. Females should be paying lower costs, because in insurance, in the insurance industry, the costs associated with insurability, basically, they look at all the actuarial data, they get the census data. When do people die? Well, everybody knows females live longer, so that means the insurance costs less. So why are we all paying the same price? Doesn't make sense. And so we move over to SBP, same things happening, just different variables, different parameters, same price for everybody. At the end of the day, there's no qualification. But it's also automatic. You don't have to opt into this one. With VGLI, you get, currently I think it's 240 days to transfer SGLI to VGLI. And that's nice, because you can get the coverage of SGLI during that time, and you don't have to do any medical underwriting to qualify. Now, later, if you haven't done that and you want VGLI later in life, then again, you'd have to qualify again, and that becomes very difficult. So for SBP, you're automatically enrolled. You're automatically qualified. Congratulations. Well, that's actually because you had SBP all along on active duty. Once you're married, there's SBP and DIC. You might have seen some stuff in the news a few years ago when they were changing the rules around that, and a lot of current widows, military spouse widows, were having issues getting their payments. So again, similar to the problem with not recognizing there's going to be an SGLI problem later on, the same thing happens with SBP. We don't even know it's a thing, and then we show up at a retirement date, and it's just plopped in front of us. Make a decision right now, and the decision is, okay, automatic enrollment's part of my pension. It makes sense. Of course I keep it. It's for my family. It's for my spouse, just in case something happens to them. And then they say how much it costs. 6.5%. It's not a crazy number, but it's a decent chunk of change. And I'm opted into this for 30 years. So if I don't die, what's 30 years times 6.5% every year? Do the math. It could be anywhere from, for younger enlisted, $50,000, $60,000, $75,000 committed over 30 years. Once you're opted in, if you don't opt out, since it's automatic, then that's it. You're stuck with it for life, and you're going to pay those. If you don't die, you're paying that money. And then all the way on the other side of things, for the more senior officers, we're talking $300,000. And that's for every single individual veteran. Add those numbers up amongst your friends. How much money could have otherwise been in all of your pockets that would be going to the survivor benefit plan, which only has a positive outcome, if we can call it that, if you, the veteran, pass away before your spouse. And that's it. So in the guide, we talk about the probability of those scenarios occurring, and we'll have more videos for each different situation going into that. But the highest probability, the highest likelihood is that you'll be around in 30 plus years. So the fact that the just in case scenario is basically just a taxable annuity. Again, it's just your military pension was an annuity. If something happens to you, your spouse gets half or 55% of the annuity. So what's the trade-off? How do we do the math on figuring out, is 6.5% good enough for 55%? When do I got to die and all that? They overcomplicate it. They make it sound like as long as your spouse lives 3 or 4 years after you, then it's all hunky-dory and it was all worthwhile. Well, when you see the percentages of what the alternative outcomes can be, you'll definitely have your eyes open. But more importantly, I think the folks who come to us the most, that they're most disappointed about, is there's nothing to be left behind. I mean, you've served 20 years or more in the military to earn your pension. And it wasn't just you. Your family had a big part of that, I'm sure. And the fact that the value of that pension is worth a lot of money in a lump sum situation, right? So you don't get it in lump sum, but the value is worth a large lump sum. And it just goes away. It goes away once you and your spouse are gone. There's nothing to be left for your children, charity, or whatever you'd want to do. And if it's an option, actually at no higher cost, or actually potentially less cost, because with our program, you can get a return on investment without dying. I think that's the major benefit that we bring to the table that you'll learn about later in this program. You know, the option to use the same amount of money that you would otherwise put into SBP and or VGLI to get the similar benefits that would have come from either of these programs. The fact that you can design how those benefits would be played out, design the probabilities of scenarios on when you'd receive a benefit rather than just one scenario, is what makes our program a lot more interesting for the folks that have the income, have the desire, have the awareness of the various opportunities that happen when you're preparing for a successful life after military retirement. So I hope that was helpful to give you, again, more of a broader overview of the decisions that you need to make around these insurance programs, annuity programs, benefit programs. Hard to really say. Either way, it doesn't matter because it's up to you. It's what you have access to, and it's what you want and how it best serves your situation. So make sure you join us inside the portal so you can join those weekly live Q&A calls to ask any additional questions you might have on this topic or any other around your military retirement pay and benefits.